you like that? You gon' like that? Da 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 da. How you like that? How you like that? Da 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 da.
Okay, so let's record from Nam. How you like it? Okay, so let's continue our class. Last video we talked about cash dividends, 现金股利, right? So right now we talk about the second dividend, share dividends, 股票股利. Okay, so what is share dividends? Still remember? It's when your company gives shareholders your company's own shares. Okay, so you give shareholders your own shares, 自己的股票, not other companies. Only your company's own shares. Okay? Then why the company decide to give your shareholders your own shares instead cash dividends, right? Because for shareholders, you love cash or you love shares? Of course you love cash. You have the cash, you could do anything you want. So for shareholders, they prefer cash. But in some cases, your company maybe won't give shareholders cash. You will give them shares, your company's own shares. Okay, why is that? Because we've mentioned when you decide to give shareholders cash dividends, you have three things you have to consider, right? From last video. If you forgot, let me remind you again. When you decide to give your shareholders cash, three things you have to be careful think about is what? Okay, here. First, you note your cash dividends or your dividends, any kind of dividends. You pay it from retained earnings, right? So that's the first thing. So what's the second thing? Second thing is you have to make sure you have enough cash because you still need the cash to do something else, right? So that's the second thing. Third, when your liability increase happened, when you declare dividends, 宣告股利, at that moment, your liability increase. Why? Because your obligation, your promise, have happened already, right? So the three things. So the second one, you have to make sure you have enough cash, right? So when you decide, when you find out your cash, you want to use the cash for other things, other purpose, like you need the cash to buy the PPE, or you need the cash to pay the debt, right? So you don't have enough cash to pay the dividends to shareholders. When you don't have enough cash to pay to the shareholders, but you still have to satisfy shareholders' expectation. Why? Because because shareholders, they expect to get the dividends each year. If today you told shareholders, sorry, this year I won't pay you dividends, they will be very disappointed about that. So since you don't have enough cash or you want the cash to do something else, so you cannot pay them cash dividends. But at the same time, you want to satisfy their expectation. So in that case, you will give them share dividends. Okay? So that's why 没鱼黑马后没有办法给他们现金，那要安慰一下他们空虚的心灵，那怎么办？给他们股票，公司的股票。Okay, so that's the case why your company didn't give shareholders cash dividends. Instead, you give them share dividends. Okay? And the second purpose, maybe you want to increase your shares marketability, 流通性. Then why is that? Let me remind you and use the simple case to tell you why. Okay, here, when your company pay the dividends, you have two kinds of dividends, right? So first one is cash dividends. Second one is share dividends. And we talk about the cash dividends, right? So if today your company decide to give shareholders cash dividends 100, remember, you should pay the cash dividends to whom? Preference shareholders first. Why? Because preference shareholders, they have dividends preference, 股利优先权. So they have a dividends preference, 股利优先权. So that's why when you pay cash dividends, you should pay it to preference shareholders first. Okay? Then ordinary shareholders, you got remaining. So this from the last video, right? Okay. And how much they can get? Preference shareholders always get the fixed amount of cash dividends, right? So fixed amount of cash dividends, 固定的金额. So it's how many percentage you promise times par value times how many shares they have. Then how about ordinary shareholders? You got the remaining. Okay? But remember, for preference shareholders, you should be careful. Careful what? Whether the preference shareholders, they are non-cumulative or they are cumulative. Non-cumulative, cumulative will determine whether you will get the dividends from previous year, right? If you are non-cumulative means what? If the company declared dividends this year, you will get cash dividend. If company didn't declare dividends, 没有宣告股利, you don't get the dividends for this year forever. Okay? So this year's dividend, you won't get it forever. That's non-cumulative. So non-cumulative, your cash dividend is not cumulated to the next year. It's not. Okay? But when your companies, when your preference shareholders, you have a cumulative preference shares, 累积特别股, means what? The cash dividends you will get, including dividends in arrear, 积欠股利, it means the dividends from previous years, okay? The dividends you didn't get from previous years, you still have the right to get it this year when the company declared cash dividends. 当公司今年宣告股利，你还是有权利拿到过去没有拿到的积欠股利。Okay? And plus including the cash dividend this year. So that's a different. Okay? So remember for cash dividend. We talked about that last video. And here we talk about the second dividends, right? Share dividends. So share dividends here if I assumed the company told shareholders you are going to give them 10%. It means what? 10% more shares. So if you have a shares, 10 shares, they will give you 10% more. So they will give you how many shares? 1 shares more, right? 10 shares times 10%. So you will get 1 share more. So this 10% means. So give you 10% shares more. And remember, cash dividends. We mentioned cash dividends. We give the dividends to 2 shares, right? 2 kinds of shares. Preference shares, ordinary shares. But when we talk about share dividends, 股票股利, we give that only to ordinary shares. Only to ordinary shares. Okay? So for preference shares, they have the right only to get cash dividends, not shares. Okay? So when we talk about share dividends, we mean we are going to give the shares to ordinary shareholders. Okay? And the shares we are going to give it, of course, is ordinary shares. So here, share dividends only focus on ordinary share and only give it to ordinary shareholders. Okay? Then right now, when we are going to give it the dividends, share dividends to our ordinary shareholders, right? So right now in the market, we have two ordinary shareholders, A and B. For A, he has 80 shares on his hand already. For shareholder B, he has 20 shares on his hand already, okay? So remember, when we talk about the shares, ordinary shares, what's the very important issue you need to note? Ownership, 所有权. Ownership, 所有权 means their power in the company, right? So for shareholder A, he has a power in the company. How many? 80%. 80%. Why? Because totally 100 shares, right? For 100 shares, A have 80 shares. So that's 80%. For shareholder B, they have a 20% ownership. Okay, so ownership is very important for your boss because they decide their power in the company. Okay, another question. They 20 shares, they 80 shares, totally 100 shares. Totally 100 shares, we mean issue shares, 已发行股票, or we mean outstanding shares, 在外流通股数. In the market, outstanding shares, okay? So totally we have outstanding shares, 100. Okay? And then remember, when your company give the dividends, only we give it to outstanding shares because we don't give the dividends to treasury shares. If you forgot it, please go to the previous videos. We talk about it already. Okay? So here, your company decided to give shareholders A and B, give them 2% more shares. So you give it to A 2% more. So, sorry, not 2% more. Sorry, 10% more. Okay, and you give it to shareholder B 10% more. So, first question, you should understand 10%, how many shares? Then you should note how many shares they have. For A, have 80 shares already. So, times 80 shares, it means you are going to A, how many more? A shares more, right? So you are going to give it A shares more. How about shareholder B? He has 20 shares on hand already. So you are going to give it 10% more. So 10% more is how many shares? 2 shares. Okay? So the first question is you should know how many shares. A shares, 2 shares. Okay, then after that, could you tell me for A, right now, how many shares A have? Before 80 shares, right? Right now, how many shares? So here we talk about after. Okay. Okay, so for shareholder A, before 80 shares, right? Right now, your company give shareholder A 8 shares more. So for shareholder A right now, it has 80 plus 8. So he have 88 shares. Okay? So how about shareholder B? Before 20, right now, he got 2 shares more. So totally, he had 22 shares on his hand after share dividends. Okay, so we talk about the effect after share dividends. So in this case, the total outstanding shares will be how many? 100 shares, right? 110 shares. So did you find out your outstanding shares increase, right? From 100 to 110. So outstanding shares increase. So that's the first effect. Outstanding shares increase. Why? Because you give your shareholders more shares. 10% more, right? So of course outstanding shares increase. So let's look at the second effect. Remember, for shares, always think about outstanding shares. Think about ownership because you had to be careful about the ownership. They will decide your power in the company. So let's look at shareholder A and B. Even though they got more shares, whether their ownership 所有权 increase or decrease? Okay, so you look at shareholder A and B totally how many shares right now? 110 outstanding shares, right? So for the 110 outstanding shares, shareholder B have how many? Right now, 88, right? Then how many percentage it is? Amy, do the math. Okay, sorry about my bad math. So it's 80%. How about shareholder B? Totally right now, after share dividends, outstanding shares 110. And for shareholder B, totally right now, he has 22 shares on his hand. So there will be 20%. So did you find out for ownership? They are the same, 80 before, right now still 80. Shareholder B, 20 before, right now still 20. So for the ownership, didn't change. The same. Okay? So what does it mean? It means for shareholders, when your company give them shares more, it didn't change their power in the company. So actually for shareholders, when they got the shares, there's no effect for shareholders, even though they got more shares. But the power in the company the same. So that's very important for shareholders. They don't have any benefit from these share dividends because their power ownership the same. Maybe you will say they got more shares, right? But when you got more shares, it means what? You have more outstanding shares in the market, right? So when you have more outstanding shares in the market, do you remember for the economic told you when your quantity increase, that will make your price decrease, right? So it means when your outstanding shares increase, they will make share price decrease. Okay? So it means what? It means actually for shareholders, they won't get any benefit from share dividends. Okay? So that's for share dividends. First effect, outstanding shares increase. Second effect, ownership still the same. So when you look at this effect, you will find out there's no benefit for shareholders. Okay? So let's go back to our slides. So that's why here, why we talk about the first reason, your company issue share dividends to shareholders. Because your company don't have enough cash, so you don't want to give shareholder cash dividends. In that case, still you want to satisfy shareholders' expectation because each year they expect to get dividends. So you cannot give them cash. At least you give them shares. So they will be satisfied, at least they got something. Not cash, but shares, okay? They got something. But if you are smart shareholders, you will note, actually, there's no benefit for you. Why? Because here told you, you still have the same ownership. So your power in the company didn't change, even though you got more shares. But you know, more shares means what? Share price will be decreased at that moment. So when you find out this result, you will know there's no benefit for shareholders, okay? But company just want to satisfy your expectation because they don't want to give you cash. And the second reason, increase marketability. So what does it mean? Increase your shares marketability means you have more shares in the market. When you have more shares in the market, means more investors could get to buy your shares. Okay, so how? More shares in the market. Did you find out the effect? Yes, the first effect told you. When you give shareholders shares, right? That will make your outstanding shares increase. Means what? More shares in the market. Okay? So more shares in the market, that will make your marketability, 流通性, increase. Okay? So this one will make your marketability, 流通性, increase. Okay? More shares in the market, marketability increase. So there's a second reason your company decided to give shareholders share dividends, because they could improve their shares marketability. Okay, so there's so far we have for share dividends and cash dividends. So I give you the time to take your note if you need. So there's for cash dividends and share dividends. Pause your video, take your note. If you are okay, you could continue the video. Okay, so that's the first part. How about the second part right here is the share dividends. Okay. Maybe this is better. Okay. Okay, so let's look at the third. What's the effect after a company gives shareholders share dividends, 股票股利? Okay, so when you give shareholders share dividends, the effect on equity will be, it's like shareholder reinvesting in business again, because they got more shares, right? So got more shares is like they invest in the company again, so that's why they got more shares. In Chinese, we call it 盈余转增资. So share dividends is like shareholders reinvesting in company again. 盈余转增资. Why is that? Here, let's look at the first effect we've mentioned, right? When you give shareholders share dividends, the outstanding shares increase, right? So all these outstanding shares increase, what does it mean? Okay, what's the effect on company's balance sheet equity section? Okay, so you should understand for equity section, you should know the meaning for each one. So for share capital, share premium, what does it mean? Share capital, share premium dash ordinary increase, what does it mean? Increase means investor, they invest in the company, right? So they put the money in the company. So they buy the company shares, okay? So your share capital, share premium will be increased. Means what? Means shareholders' right in the company increase, okay? So when shareholder invest in the company, share capital increase. At the same time, your company give them shares, right? So issue shares, 发行股票. Your company give shareholders shares. Then you got the cash from shareholders, right? So that will make your equity, share capital, share premium increase. Means their money, they put it in the company. So their right in the company increase, right? So share capital, share premium increase means what? Means outstanding shares increase, okay? Means more shareholders the company have, alright? So outstanding shares increase, that will make share capital, share premium increase, okay? Means more shareholders right in the company, okay? Then how about retained earnings? Remember, retained earnings means there's accumulated profit. We share the profit from retained earnings, okay? So your dividends, where you pay your dividends? From retained earnings. no matter is cash dividends or share dividends. That's dividends. So we pay dividends from retained earnings. Just because you pay cash or pay shares, there's different way you pay the dividends. So cash dividends, share dividends, there's different way you pay the dividends. But dividends itself, we talk about share profit. So share profit from returnees, okay? So when you pay the dividends, they will make your retained earnings decrease, right? Okay, when you pay the dividends, they will make your retained earnings decrease. So today, if you pay share dividends, that will make retained earnings decrease. And don't forget, because share dividends, so you give shareholders more outstanding shares. They got more outstanding shares means what? Their rights in the company increase, right? So share dividends will make retained earnings decrease. At the same time, they got more shares, so share capital, share premium will be increased. Okay? So that's what we talk about. Retain 盈余转增资. It means what? You force your shareholders invest the company again. So that's reinvest. 再次投资. So you could give them cash dividend. If you give them cash dividends, they got the cash, they could do anything they want. They could get the cash to buy other companies' investment, or they could get the cash to buy any food they want. But when you give them share dividend, it's like you buy the company's shares for them already. You told your shareholders, don't worry about that. I use your cash to buy the company's shares for you already. So it's like you force shareholders to reinvest the company again. Okay, so that's what here we talk about. When you give shareholders share dividends, it's like you force them to reinvest the company again. So they will have the more shares. Okay, when they have the more shares, so your share capital, share premium increase. So that's why we call it in Mandarin Chinese 盈余转增资. Okay, so share dividends, the effect is they will make your retained earnings decrease, right? Make your retained earnings decrease. At the same time, shareholders got more shares. More shares means share capital, share premium increase. Okay? So this is the effect on balance sheet for equity part. Retained earnings decrease. Share capital, share premium increase. 盈余转增资, you force shareholders to reinvest the company again. 盈余转增资. So maybe you are asked, how about cash dividend? Do you still remember when you paid cash dividend to shareholders? What's the effect for company's balance sheet equity part? Remember this chapter, the effects are very important. The effects on financial statements are very important. So that's why in this chapter we talk about a lot of effects, okay? No matter you issue the shares, no matter you buy back the shares, or even here when you pay cash dividend, share dividend, what's the effect on equity? You should understand it, okay? So let me talk about the effect for cash dividends. Okay, so I'm afraid you'll get confused. So let's compare these two dividends effect right here. So if today you have a cash dividends $10, you decide to give it to shareholders. So what's the effect? That will make your cash decrease $100, right? And also because you pay the cash dividends, right? So cash dividends increase $100. That may you have to pay the cash. But don't forget, cash dividend increase will make your retained earnings decrease $100, right? Okay, so this cash dividend. How about share dividends? If here I make assumptions, we decide to give shareholders 2 shares. 2 shares, how much? If I assume $30. So how much is the next issue we want to talk about. But here, just assume $30. Okay? So then $30, give them 2 more shares, mean your outstanding shares increase, right? Outstanding shares increase means more shareholders' rights, right? More shareholders' rights, that mean your equity part, share capital, share premium, totally increase how much? $30. Okay, so share capital, share premium increase $30 totally. And your share dividends increase $30, right? You should tell them the reason. So here you should note, for dividends, we give the more specific account. Share dividends means you give them shares. Cash dividends means you give them cash. So your share dividend increase $30, 2 shares, $30. Because of that, okay? Then you should give them shares. So that's why share capital, share premium increase. Share dividend increase means retained earnings decrease $30. Okay? You pay the dividends from retained earnings. No matter you pay cash or you give them shares. Okay? Okay, so that's why we call it you reinvest, you forced shareholders reinvest in company. Okay, reinvest in company, that's why share capital, share premium increase, because they got more shares. Then returns decrease, so that's why we call it 盈余转增资, 盈余转增资, return earnings decrease, share capital, share premium increase, 盈余转增资, 盈余减少，减少部分跑哪里去了？跑股票去了，而股票放哪里？放 share capital, share premium。OK， 盈余转增资。You force your investor, you force your shareholders to buy company's shares again. Oh, sorry about that. Okay, so since that, do you know what's the effect, the numbers on companies? Equity. So for equity, did you find out we have a share capital, share premium, and returns. So totally your returns will be decreased, right? Decrease how much? 130. So decrease 100 plus 30. So totally decrease 130. But for that, only $30 you forced your shareholders to buy company's shares again. So they have more shares because you give them share dividends, okay? So for the $30, you force shareholders to reinvest the company again. So they have more shares, 2 more shares from your company. So totally your share capital, share premium will be increased $30. Oh, $30. Okay, so there's a effect for share dividends and cash dividend totally. So this $100, they make your cash decrease. Okay? So that's when we have cash dividend and share dividend. So what's their effect for your financial statements equity? Okay? Then let's continue. Here, so that's right. For share dividends, they may retain earnings decrease at the same time may your share capital, share premium increase. Here, sorry, you should dash ordinary. Please dash ordinary. Okay, 盈余转增资. So next question. Before we go to the next question, so here, what's the effect for ordinary shareholders? Actually, we've mentioned already, right? So what are the effects for your ordinary shareholders? Here, we told have 2 effects, right? 2 effects. So what are these 2 effects? Here are these 2 effects, right? For shareholders, ordinary shareholders, first, they got more shares. Second, their ownership still the same. Okay? So we talked about it already. So it's the same content here. They got more shares. They have more shares. But actually, the ownership the same. So actually, for shareholders, they don't have any benefits because their power in the company the same. So share dividend is like your company force. They reinvest in the company again. So they cannot get the cash. They just got your company's shares again. So they have more shares. Okay, so after that, you understand the effects. Let's talk about the numbers, the amounts. So how to determine the numbers, the amount for the share dividends? Okay, so here we just talk about the numbers here, right here. I make an assumption, right? So I made an assumption right here for share dividends, $30, $30. But how to determine the $30? I want to talk about the issue right now. 2 shares, we know it already, but 2 shares, how much? What's the amount for 2 shares? $30. Okay? Okay, so how to determine the amount for the share dividends? We have 2 ways. First is small share dividend, small share dividend, 小额股票股利 small share dividends, so it's small. And the large share dividends, 股票股利 so it's large. What does it mean? It means when your company decide to give shareholders shares, you give them the shares a small amount or large shares, okay? So it means less than 20 to 25% of a company's shares, okay? So that's small. If large, greater than 20 to 25% of the shares, then there's large share dividends, okay? So 20 to 25%. So maybe you ask 20 or 25, which number? It depends on your company. Your company could decide 20% is a cutoff, or your company could decide 21% is the cutoff, or maybe your company could decide 25% is the cutoff. So here we'll give you a range. It means depends on your company to decide the cutoff, okay? So for example, we use 20%, okay? So when your company gives shareholders share dividend less than 20%, you could say it's small share dividends. If your company gives shareholders share dividends greater than 20%, you could call it large share dividend, okay? So there's a difference between small and large. We use how many shares you give to shareholders to determine this small share dividend, 小额股票股利, or this large share dividends, 大额股票股利, okay? After you determine this small or this large, then we can use it to define the numbers, okay? When it is small share dividends, and which number we put it on the share dividends, we use fair value, market value, 市价, fair value, market value, 市价, okay? And if you find out it's large share dividends, 大额股票股利, so which number we use? We use par value, okay? So far right now, which method is used by most of companies? The first one. Why? Because usually, will you give your shareholders the shares larger than 20 to 25? Usually, this kind of things impossible. Why? 25 means what? You give them more than 25. So it means what? For your total shares, you give them 25%. It's too much. Okay? So usually the first one is possible. We won't give shareholders so many shares. Okay? Impossible, because they will have a big effect for the company's outstanding shares. So I've mentioned before, usually the major way we give the dividends, the major way is cash dividend, okay? If some case you really give them shares, they won't be too much, okay? They won't be too much. So the first method is the major way we use. So when you give them share dividends, the number we use is market value, fair value, okay? So what's the effect for your equity? When we use small share dividends, 小额股票股利, when you pay them the shares less than 20% to 25%, okay? In that case, we use the market value, okay? So here, par value, for example, $1, market value, $10. So what's the effect for your equity? Remember, share dividend, we pay the dividend from where? From retained earnings, right? So your retained earnings will be decreased $10, the market value, okay? Retained earnings decrease, don't forget, share dividend made your share capital, share premium increase, right? Sorry here, dash ordinary. You write down that by yourself. So your share premium increase. For share capital, we put only par value, right? So here we told you par value $1. So your share capital will increase par value $1. So how about the other $9? We put it on share premium. So your share premium will increase $9. Okay? And did you find out totally for your equity? No effect. Why? Because your retained earnings decreased $10. But at the same time, your share capital, share premium totally increased $10. So that will make your total effect no effect. So did you find out? When your company give share dividends to shareholders, for shareholders, their ownership the same. So for shareholders, they don't have any benefit. How about for your company? For your company, actually the total effect, no effect. So the only difference is your outstanding shares increase. But even though your company's outstanding shares increase, did you find out for your financial situation, for your total equity, no effects? Okay? How about if your company gave shareholders the shares larger than 20 to 25%, and we call it large share dividends, 大股票股利. Even though this kind of case won't happen, it's a rare case. Okay, if they happen. Remember, for this, we use par value to put the number for share dividends, okay? So your retained earnings decrease par value, okay? Then, that makes your share capital, share premium increase, right? But remember, here, for large share dividends, we use only par value. So retained earnings decrease par value $1. And we put the $1 on share capital $1 increase. So in this case, if we use large share dividends, 大额股票股利, there will be no effect for your share premium. So your share premium, no effect. Because $1 return is decrease, we make share capital increase $1. Okay? And here, don't forget, sorry, you write down by yourself, dash ordinary. So did you find out, no matter you use small share dividends, no effect for your total equity. When you have large share dividends, still no effect for your total equity. You just put the number from retained earnings to share capital, or from retained earnings to share capital and share premium. That's it. So total effect, no effect. So did you find out for share dividends? Only thing change is outstanding shares increase. But for shareholders, no benefit. For company's total equity, no effects. Okay? The only thing is the detail items. The retained earnings decrease, share capital, share premium increase. So you just transfer the numbers from retained earnings to share capital, share premium. That's it. Okay? So that's when your company give them share capital, give them share premium, then you should note the share premium, when your company, again, so here, when your company gives shareholders share dividends, 股票股利, you decide the numbers, amounts. Then you should note the share dividends is small share dividends, or the share dividends is large share dividends. So why is small? Why is large? Small means you give them the shares less than 20 to 25. In that case, what's the number we should use to determine the amount of share dividend? We use market value, fair value. Okay? And if there's large share dividends, means you give them shares more than 20 to 25. So you give them a lot of shares. Then what's the number we should use to determine the amount of share dividends? We use par value. Okay? So when you use the market value, the par value, what's the effect on your company's equity? When you use market value, when there's small share dividend, you use market value, right? So market value, that means your return earnings decrease the market value. And return earnings decrease at the same time, your share capital, share premium increase. Why? Because they got more outstanding shares. Outstanding shares increase means your share capital, share premium increase. Increase how much? Share capital, we put par value. So par value is $1. Others, $9, make your share premium increase. Okay? How about if you give them the shares, more shares, so there's large share dividends. Then we use par value, okay? We use par value to determine share dividends. So your returns will be decreased par value, okay? Return is decreased, make your share capital increase, only par value $1. And in this case, your share premium no effect because we use par value, okay? And no matter you use par value or market value, it doesn't matter because your total effect, no effects. Your total effects, no effects, okay? And so far right now, large share dividends, actually, you should know is real case because company will give them cash dividends. If they really give them share dividends, they want too many, So large share dividends, usually they couldn't happen. It's impossible. So that's real case. So that's why here we told you for most of company, they use the small share dividends. So you will use the market value to determine the share dividends amount. Okay? Okay, so let's practice the note on page 20. So it's a note on page 20. Here, your company issued the share dividend. So you should know how many shares and the amount, okay? So here, your company declare. So do you remember what does that mean, declare? Declare, 宣告 means release the information, right? So you declare release the information. So then you are going to give shareholders 10% share dividend. So did you find out 10%? So it's small or large? 10% small, right? So small share dividends. Here then, when you find out it's small, it tells you which number you should use. Market value, okay? On is 50,000 shares. So your company outstanding shares totally 50,000 shares. Based on that, you want to give them 10% shares more, okay? And here is the par value, $100. Right now, the current market value is $150 per share. Okay, so based on that, please, first questions. Number of share dividends. How many shares your company is going to give to shareholders? 10%. So how many? Questions, the amount. So how much? Because it's small share dividends, right? So we use market value. So please practice by yourself. Pause the video after you've done this table and come back to the video. Okay? Welcome back. So let's look at the solution answers. 10%, right? So 10% for 50,000 shares. So how many? 10% times 50,000 shares. So will be 5,000 shares. So you give shareholders 5,000 shares. 5,000 shares, how much? 5,000 shares times, because there's small share dividends. So we use market value, right? So the department told you market value is $150. So 5,000 shares times $150, you got a total amount of share dividends. So total amount of share dividends is $750,000. Okay? Since you got the numbers, next step, how to record that transaction. We want to talk about this. Okay. By the way, for my answers, solutions, here I want to make some correct. The correct is here the word. If you find out this word should be outstanding. It's not issue shares, right? We've mentioned for treasury shares, they don't have a right to get the dividends. So there's outstanding shares. Sorry about that. Okay, and also if you look at the slides, so for this slide on 136, if you look at the slide, please change to outstanding shares, not issue shares. Treasury shares don't have a right to get any dividends. So here it should be outstanding shares, okay, not issue shares. Okay, then after you got the numbers, $750. What's the next? The next is we should record it, right? So how to record it? Don't forget, for your dividends, we have 3 important dates, right? So what are these 3 important dates? The 3 important dates is declaration date, 宣告日. Also, we have a record date, right? But because record date, try to find the both, try to find the shareholders. So in accounting, the record date, we don't need to do anything, right? And the third date is what? Payment date. Finally, you give them cash or you give them shares, okay? So on declaration date, we just practice here, right? You give them 10% share dividends. 10% how much? $750, okay? But declaration day, we just release the information. We just announce it. Did you give them shares yet? Not yet, okay? But so here, amount $750. So how could we record it? What's the journal entry we use? Okay? So what's the journal entry we use? Okay, before we told you for share dividends how to record it, let me remind you again. Before the start, at the beginning of this chapter, we've mentioned when you issue shares, right? So when you issue shares, sell shares, you got the cash, right? So what's the effect for your company? You got the cash, so cash increase, right? So how about the second effect? You give shareholders shares. So when you give shareholders shares, outstanding shares increase. So that will make your share capital share premium dash ordinary increase, right? Okay, so here when you give shareholders share dividends, also they got shares. So that will mean your share capital, share premium should be increased, right? The only difference is share dividends. You didn't get the cash. So that's the only difference. Okay. So here, when you declare share dividends, so you have two effects, right? Right? So what's the first effect? You tell them because you are going to give them share dividends. So share dividend increase because of that. You are going to give them shares, right? So second effect should be the same right here, right? The only difference is share dividends. You didn't get the cash. But still, you should give them shares. So your share capital dash ordinary should be increased, right? Your share premium dash ordinary should be increased, right? Okay, so did you find out? Actually, the same. The only difference is you didn't get the cash. But when you run, okay, so you write down on journal entry. So what's the debit, what's the credit? Okay, so that's a journal entry we use, right? Share dividend increase on debit side. Share capital, share premium increase on credit side, right? So you are debit share capital, credit share, you are debit share dividends, credit share capital, share premium. Okay? Yeah, that's it. But what's the problem? The problem is today is declaration date. So declaration date, just the day you release announced the information. Did you really give the shares to shareholders? Not yet. You didn't give them shares yet. Okay. So since you didn't give them shares yet, in accounting, we want to tell outsider this situation. We are going to give shareholders shares, but not yet. Okay, not yet, because we didn't give them shares yet. Okay, so here, because we want to tell that kind of information, we are going to give shareholders shares, but not yet. So we change this account. We use a new account to tell them the situation. So what's the new account? The new account is here. We call it ordinary share dividend distributable. Ordinary share dividends distributable. 待分配股票股利，待分配股票股利。OK。Ordinary share dividends distributable. 待分配股票股利。So what does it mean? It means we are going to give shareholders dividends, but not yet. Okay? And we put it below the share capital dash ordinary. So this account also is an equity account. It's going to be share capital, but not yet. Going to be share capital, but not yet. Okay? So you will find out this account below share capital. Below share capital. Ordinary share dividends distributable. It will be share capital, but not yet. 待分配股票股利是准股票，准股本，准股本。所以是不是股本 share capital？ 不是，但即将是在什么时候？在发放股票股利的时候，所以准股本准备是，但还不是。Okay? So we put it below the share capital. So it's also your equity. It's going to be share capital, but not yet. We are going to use this account to tell them the situation. So what's the situation? It's on declaration date. So your company is going to give shareholders share capital, but not yet. Not yet. Okay? So we use this account right here. So here we change it to ordinary share dividends. Share dividends. Distributable. Okay, so that will be a little bit different. But we use this account, just want to tell them the situation is on declaration date. So your company didn't give it to shareholders yet. Okay, then when your company give it to shareholders? Payment date. So next day, when the payment date, we should tell them it's not these situations because we give it to shareholders already, okay, on payment date. Okay, so how about next day, payment date? Finally, you really give the shares to shareholders, right? So this situation, ordinary share dividend distributable 待分配股票股利 is not these situations anymore, right? Because on payment day, you really give it to shareholders. So this situation should be disappear, right? So your ordinary share dividends distributable should be decreased. So is credit at the beginning. Right now, you should put it on debit, right? To make it disappear, because right now this situation disappear. You give it to shareholders already. So when you give the shares to shareholders, finally, which account should appear? Before share capital dash ordinary, this account should appear finally right here because what? You really give the shares to shareholders, okay? So that's a journal entry we use. If you don't have any questions right here, please practice page 20 to record the whole situations, declaration date, payment date. So write down the journal entry and also go to next page, page 21, the effects. Remember, on this in this chapter, the effects on equity very important. And we talked about the effect before, right? So try to think about the effect by yourself and put on the numbers. Okay, so pause the video, practice page 20, journal entry, and 21, the effects. After you done of these 2 pages and come back, look at the answers. Okay? Okay, welcome back. I hope you do right or do fine. So let's look at the declaration date when your company declared share dividends. So how much? $750, right? You got the number by yourself before. And we should recall the transaction right down here, right? So what's a debit, what's a credit? Debit, share dividends, right? Because you announce the information. So share dividend increase. How much? $750. At the same time, you give them shares in the future. So that will make your share capital, share premium increase, right? But here should be careful because it's on declaration date. So remember, on declaration day, we didn't give the shares yet. So we will use this account to tell them we are going to, but not yet. Okay? And this account is going to be share capital. So here, of course, we put the par value. So what's the par value? The par value. Ordinary share dividend distributable. Ordinary share. Okay, so for this account, we should put the par value, right? So the par value, how much? The problem told you the par value is $100. So it's $100 for the par value. And you are going to give the shareholders how many shares? You got the number 5,000 shares by yourself right here. You find out it's 5,000 shares, okay? So 5,000 shares, par value $100. So it's $100 times 5,000 shares. Okay, so you got a number $500,000 for this account. And the others, we put it on share premium dash ordinary. So it will be $250. So that's declaration date. How about the payment date? Payment date, your company rarely give the shares, right? So you should tell them the situation is different. So your ordinary share dividends attributable should be decreased. And you rarely give the shares. So you should make your share capital dash ordinary increase. Okay? How much? These two accounts, they put the par value, right? So here the par value. Okay, so that's journal entry we use. How about the effects? So for this chapter, remember the effects quite important. But if you understand the concept I've just mentioned, you will understand. For share dividends, the total effect will be the same, right? So the total effect will be the same, no any changes. So for the changes, no any changes. The only difference is your outstanding shares increase, right? So your outstanding shares before 50,000 shares. Right now, you get the shares 5,000 shares more. So that means your outstanding shares increase to 50,000 shares. Okay? So the outstanding shares increase. So that's the effect. First one effect. What's the second one change? We've mentioned share dividends is like you force shareholders to reinvest in company again, reinvest. 盈余转增资. So the difference is your earnings will be decreased, right? Earnings decrease. At the same time, then your share capital, share premium increase. So that's the second effect for share dividends, right? So did you find out? Your retained earnings will be decreased how much? The share dividends amount, $750. So may your return is decreased, right? To this amount. At the same time, return is decreased. That means your share capital, share premium increase the same amount, $750. Okay? And we put a share capital par value. Others we put on share premium. Okay? So you got your share capital, the amount after share dividend will be $5 million and $500,000. And your share premium before, if we assume zero, so right now your share capital increased to $250. Okay, so that's the effect from share dividends. So if you understand the effect, actually there's two effects. First is outstanding shares increase. Second is your returns decrease. That will make your share capital, share premium increase. Okay? So that's for share dividends.